Joining us from Washington is Euronews correspondent Stefan Grobe. Stefan, since 2008, the Federal Reserve has launched 3 rounds of bond buying programs. The first 2 were mainly aimed at stabilizing the financial system and the latest at quickening the recovery. How effective was the 3rd round?
Well, the Fed would tell you that it was effective, that unemployment has come down from above 8 to below 6%, that the economy has grown, though modestly, that it boosted hiring, and that it helped lower long-term interest rates. Now, the opponents on Capitol Hill and in academia, even within the Fed, would tell you that QE3 has only compounded the existing inequality in America, that the newly created jobs are low-paying jobs, that wages are stagnant, and that the economy in general grew pretty erratically. So that thinking is the middle class got creamed again, while stock owners only got richer.
For nearly 6 years, the central bank has been pumping money into the U.S. economy. Now the bond buying program is over. Is the economy strong enough to do without that stimulus, and can it grow on its own?
Well, that's the million-dollar question, right? Let's remember, QE3 has swelled the Fed's balance sheet to unprecedented levels. The money the Fed created to buy bonds, that's more than $3 trillion, could fuel excessive inflation when growth finally picks up. Or it could lead to asset bubbles that could cause financial instability and potentially another crisis. Then there's always the risk of a severe blowback that could be triggered by almost anything.
All the Fed's decisions are closely watched outside the US, but this one is of particular importance. How would it influence Europe and the emerging markets?
If the US economy picks up, that should give Europe and emerging markets a big boost. But there are other important elements here as well. What happens to the dollar? What happens to the oil price? And finally, how will things shape up within the eurozone?
That was Stefan Grobe, Euronews Washington correspondent. Stefan, thank you.
Thank you, Sasha.